The European Commission has revealed details of an investigation into the tax deals that the Irish government granted to Apple, claiming that in 1991, Dublin gave the company favourably and potentially illegal terms. In a highly critical report, the Commission argued that Ireland gave sustained state support to Apple that may need to be recouped. To discuss this issue today is Vanessa Houlder, the FT's tax correspondent. Vanessa, thanks for joining us. Explain exactly what the European Commission is detailing today.
These are its preliminary findings to a probe that it's been conducting into whether there was illegal state aid. It takes a view that if a company managed to get favourable tax treatment, well then it's at odds with the competition law in Europe, which means that everybody should be treated the same. So they've looked really hard at just how those tax agreements, the so-called tax rulings, were made between Apple and the Irish authorities.
So they're accusing, what are they alleging Apple and the Dublin authorities actually agreed that was improper in today's view?
This is focused on Ireland rather than the company, but underneath it, it suggests that the way that Apple and the Irish Tax Authority got together in 1991 to work out how their profits would be taxed involved discussions about employment. It said that the way it would be taxed would depend on how profitable the company was. They didn't want it to stand in the way of employing more people. And also just the way they did that calculation looked a bit odd. Reversed engineered was the term it used.
So is the implication that, as you're a member of the EU, that this is advantageous to one country at the expense of others within the Union? Why is it that it's problematic now?
The issue is whether a particular company or set of companies got favourable treatment, because that would mean that their competition within Europe was, the playing field wouldn't be level. And that's always been an important issue. What's new is looking at tax in this way. This is a big new thrust for the Commission.
So looking forward, where does this lead us? That Apple isn't, I believe, the only company that's been involved and mentioned in these investigations. Others have been. What is at stake for the companies and also for the Commission itself?
Yes, Apple wasn't the only one. They initially announced a probe into Starbucks and also into Fiat. And since then we've learnt that Amazon is also the subject of an potential investigation. What's at stake for the companies is the very real risk they might actually have to pay back the tax that if the Commission says it wasn't being charged enough in the first place.
Which presumably could amount to billions of euros.
It could do. I mean, of course, calculating how much tax is at stake in these things is incredibly complicated. And it's also, there's an element of subjectivity in it as well. So I think we'll see quite long and quite complex arguments over this.
Now, Apple has said that this is unfortunate, and it will protest its kind of innocence in this process. How do you see it playing out over the next months and years? Because I guess this could take a long time to resolve.
Yes, Apple is absolutely adamant that the Commission does not have a case here. And so it is going to come back with some more detailed arguments explaining its view. And then this will continue. There will be discussions and they will continue for quite some time. So it could be months and even more than a year before we get the outcome of this case.
Vanessa, I'm sure we'll be talking to you again in the near future. Thanks very much. To read more news and analysis on this story, go to ft.com.